Hello, my Teaserking family. Sorry, I froze up and then I lost the internet, and there's nothing I can do about it. It's not in my hands. It's either my internet or YouTube, and I think it's more YouTube because I'm fine on the internet on other tabs. All right, so we're talking about the FX rates. And so this is why China doesn't want to do what they're doing. These countries don't want to keep exchanging their money into dollars and then dollars into rupees or Swiss francs or British pounds or whatever. How they're even come up with is bullshit. As I explained in the first video, there's no rhyme or reason for why $1 is worth 7 won and 84 rupees and 82 rubles. It doesn't make sense. So that's where we're at with it. So I can see why they're not de-dollarizing. They just don't want to use dollars, whatever word you want to come up with. They just basically want to buy something with their money instead of having to get dollars to buy something. Why do you need dollars to buy anything? So this is why they're all going to a gold-backed currency, and this is why the demand's so huge for gold, and hence why the gold price is going to the moon. So COMEX is a system of price fixing. They sell derivative contracts to lower the price, like Eddie Murphy did in Trading Places. I can show you that again. And that's what you have is they're just trying to hit a price. Let's make gold 2,000 an ounce. And short. Well, it works if there's no physical in the play. Just like Eddie Murphy, there's no orange juice in play there. They're just trading contracts. But once you get physical gold and people taking delivery, it changes the whole price fixing around. Silver, they don't have Basel III yet. Silver's headed there July 1st, where then that'll change the price fixing because you'll have to do silver. Right now, it's the bullion banks who do not want it over 35 because they'll have to settle all their derivatives at 22, 24, 25, 26. It's trillions of dollars they'll lose because they'll have to come up with the silver, if they can even come up with the silver, because there's not any silver to come up with. Right now, they're going right to the mines. China's going right to the mine, getting whatever it's called, the raw material, taking it to Switzerland, saying, here, make it into brics and coins. Because they can't go to COMEX, there isn't any on COMEX. So this is where they're stuck. Happy I got done with my tax return today. I owed a little, so there was no reason to do it ahead of time. Just put it on the credit card and pay it later. Hopefully I get unemployment. I did that yesterday and waiting to get accepted because they didn't put my first quarter earnings on yet. And I need the first quarter and the fourth quarter to have 2 quarters of earnings. So that'll ease the blow on the income tax, but that's okay. I took it all out to buy gold. The gold was bought at 1900. So, if I have to sell an ounce of gold to get $3,200, I'll do that, but I'd prefer not to. I still have money in the safe to use, but we'll see. Anyway. What else? So that's what's going on. So the tariffs then create the country who's selling the goods is the one that pays the tariff. So if China is selling electronics to the U.S., China pays the tariff, not the U.S. Now, does China say, well, this is $1,000. I got $1,000 tariff. I'm going to charge you $2,000 for it? I'd tell them to fuck off. I'd say, no, it's $1,000. That's what the order is. I'm not paying your tariff. Now, you can only do that is if you have competition and you can not, you don't have to pay China. I'll buy it from Japan or I'll buy it from somebody else. And that's really what it is. It's what other options do you have? If you don't have any other options, you might have to be paying the tariff. You want it, you got to pay the tariff. That could be, maybe not. But that does not mean you can then raise your prices to the consumer. That's the old, we'll pass it on to the consumer buying it. The consumer buying it's going to tell you to fuck off. I'm not paying more for it. I keep getting these stupid who the fuck are you? How am I doing? Who the fuck are you? I keep getting these telegrams. What a scam this telegram is. Anyway, so that's what you're doing is you keep the point of the tariff is you're saying like Apple, oh, I'll just make the iPhone go from 1,600 to 2,600 because it's costing me another 1,000 to do it. Well, no, that's not going to work. This is the problem, right? It only works if the consumer, us, says, "Yeah, I'll pay the tariff for you." Why the hell should we pay the tariff for them? It's Trump's tariff. Let him pay it. This is the problem with tariffs. This is why you want free trade. You do not want tariffs because it's a tax on the producer, the country that makes it. They're selling it to you, so all it does is make their costs go up. If you choose to pay their tariff, that's your problem. If you choose to raise the price, then we decide if we want to pay it. Well, if there's other goods out there, we won't pay it. If we have to get an iPhone, we won't pay it. But if we don't have to, we won't pay it. And that's where it boils down to is what do you have to do? So that's really what it is. But the tariff is no more than a tax. So if we step back, what Trump's trying to do, and I don't think he's very intelligent, is trying to, how do I pay a $37 trillion debt? Well, you can't print money or he'd do that. You could raise the price of gold if you had any gold, which you don't. Bitcoin's not the answer. He's trying to do Bitcoin. Well, Bitcoin's not real anyway. He can't raise taxes because most people aren't working. So his only really choice is to do these tariffs as a way of raising taxes. So he's trying to substitute the income tax or the sales tax of what we pay to the tariffs of what other countries sell us. Now, why would you want to raise the cost or the price of what other people sell us? I'm going to sell it to you for $1,000. No. We're going to make you pay $2,000 for it. 100% tariffs. Why are you penalizing them? They're selling you goods you need. That's what free trade's about. Why do you do free trade in the first place? Because you like the items, services, products from other countries because you don't have it in your country. If China can make TVs for $100, we go, that's great. We'll take it. So why, if that's the case, do you want to charge them more? That's the benefit of the tariff, of the trade, is I get something from China, they can sell to me for 100 because their labor is dirt cheap. So why do I want to sell it from them? And that's really the whole key to it. Why am I penalizing them? I shouldn't be penalizing them, but I am. So then they don't want to trade with me anymore. So they go to Japan, or they go to Russia or India or another country and say, hey, I got these $100 TVs. And they buy it from them. So really that's the problem, is the point is why do you trade in the first place? Right. So if you understand that, it's because it gives you a benefit of trading with you. So if I trade with, if I trade with somebody with profit, he's Canadian. So here's a Mario Lemieux card. I'll trade it with you. You get the Lemieux card you can't get at a decent price, and I get another card, or I get gold or silver. I want gold, you want the card, we trade. That's what trading is. Wait a minute, you're going to tariff me? You're going to charge me an extra $1,000 to trade you the card that you want? No, I don't think so. Then I don't make the trade. It's not worth it to me. That's why it's got to be free trade. There's nothing else there. I give you the card, you give me the gold, we're all happy. And so the tariffs piss everybody off. They're not very smart. They cause a lot of increase in costs, which then are you going to pay for it? So now if you tariff me on the Lemieux card and you say, well, I'm going to put a $100 tariff on it. So now I'm going to trade you the card for the gold, but I'm going to say, well, yeah, but there's an extra $100 of tariff on it. So I'm going to charge you for the tariff. You say, I don't want it. Or maybe you do want it and you can't get it anywhere else. You're going to get it. But then you're going to tariff me on the gold. You're going to say, well, then fine. Then you're going to pay an extra $100 for the gold. Nobody benefits from that. So the government's trying to get the money for the debt through the tariffs. There's no such thing as a trade surplus, trade deficit, trade balance. Okay, there's no such thing as a trade balance. I'm selling you certain things and you're selling me certain things, and it's not supposed to balance. It doesn't have to balance. That's not the point of it. The point is the trade. I have the Lemieux card. I'll trade. I'm going to I'm going to sell that to you and you buy it. Okay. That's what you want. You can sell this. So you can sell this because you got a lot of Mario Lemieux. Let's say I sell it to Luke in Pittsburgh. He's got a lot of Lemieux fans in Pittsburgh. And I get the money for it, or I get the gold for it. That's the idea of the trade. So he pays for the card, and that's it. I mean, I assume we what is the point of balanced trade? There's no trade balance that needs to be made. I'm giving you something you need, and if you don't need things I sell, then who cares? But I'm getting things that I need from you. So, of course, there'll be trade imbalances. I'm going to buy more stuff from you, China, because your labor's so cheap. Doesn't mean I have to sell the exact same amount back to you. So this whole tariff on our cars or on our bicycles or on our golf clubs, I mean, it's all meaningless. It's crap. It's not the function. It's not to balance the trade. It's to trade. It's to get things you don't have. It's as simple as that. You're not looking for a trade balance. So what Trump's doing, he's causing a massive depression because all the Chinas are out of work. This whole thing with Apple, it's killing the stock price, and they're going to be out of work in China. Foxconn, I think it's called. The Apple products will be more expensive if they can sell them at all. And if they can't sell them at the higher price, which they can't, then they're going to have to sell them cheaper and take the loss. So it cost me. So as I say with my Canadian club, well, this cost me $75. I can get $100 for it, but now if it's tariffed at $75, now it costs me $150. Well, let's just add it to the buyer. We'll charge him 250. Well, that doesn't work. He can't, he's not going to pay 250 for it. In fact, he'll only pay 100. So my cost went to 150. I can't pass it on to my consumer. He's not going to buy it. That's not how it works. I love how people think that's how it works. Well, we'll just get the customer with it. Like the customer doesn't have their own budget and their own. All I got is this, and I'm not going to pay more for Canadian Club or for an iPhone. I'll buy cheaper, and that's what happens. So that's where we're at. Um, and so Trump's causing a depression because people are losing their job in China. People can't buy it here because it's too expensive, or they don't mark the price up, in which case they got to lay off people. It's a lot like minimum wage. Minimum wage causes job loss because if I'm doing a budget for my job, let's say I own a McDonald's, and I figured, okay, the guys who flip the hamburger and fries, I can afford $10 an hour for them. Minimum wage comes and says, well, you got to pay them 15. Well, I can't. It's not in my budget. I lose money at 15. I can only do 10. So if I do 15, I got to cut 2 people. So you're causing my restaurant a lot of grief because now I have to pay more for I have to pay more that I can't afford, so I have to lay people off. So minimum wage really causes a lot of unemployment. And this is the problem with the Keynesian communist theory. Oh, well, just why don't we pay everybody $100 an hour? Because it doesn't work in the budget of the company. I can't just pay unlimited amount. This is all they're worth. They're flipping hamburgers and fries. I'll pay them $10 an hour. And because you're inflating the dollars, I can charge more. When I look at these old 1970s McDonald's, the hamburgers were 20 cents. Now I at least can charge $6. But the whole thing's skewed. I'd rather charge the 20 cents and pay the guy $2. So Trump's really causing a problem. The tariffs are a huge problem. Free trade is the only way to go. You're stuck with this debt of 37 trillion, and guess what, fella? You're fucked. I mean, you have to get more income in to not only pay your immediate expenses, but above that. So in other words, let's say you get in 2 trillion in taxes, but you're spending 5. Well, you got to cut your spending. Well, you can't cut the interest. Maybe you need to cut the military. Maybe you need to cut the Social Security and the Medicare. You definitely can cut that out. You can not cut it to zero. What you should do is lump sum it. All right, Howard, I'm going to lump sum you. Here's $100,000, and then you won't get any more. And I'd say, thank you very much. And I'd go buy a bunch more gold with it, and that would be it. I don't need your monthly amounts if you just lump sum me. Then you'd be done with it, but they don't do that. So it ends up where, but you got to lump sum me a fair amount because this is money I gave to you, so I want my money back at least. That's the only way you can do it. But 37 trillion in debt, you can't get out of it. So that's your first problem is paying the interest on it. And then once you pay the interest, then you can go from there. So it's a real big problem, the debt. You're trying to get out of it by tariffing, but you're going to cause a depression. They can't just raise the prices. You can't go and get, let's charge $10 a bottle for Coca-Cola. We saw they raised it to $3.50 at Kroger's, and they're 2 for $5. They can't. Nobody's paying for that. So if you get them 2 for $5, they think they're getting a bargain. They'll buy 2 for $5. But really, nobody's paying $3.55 for a 2-liter of Coke that used to cost 99 cents. So you've got big problems there. You can't just raise prices. The consumer can't pay for everything. And so you have bigger problems. You should eliminate the income tax and put it to a sales tax. Maybe you get a little bit more there because everything you give to the government, they don't know how to spend. Uh, anyway, so that's that. Gold and silver, gold's reacting nicely. It's making its move because of the demand, because all these currencies want to get into gold, stop losing their money. Holding dollars, you're losing value as it's not even 1% now. And so all the central banks are buying gold, which is keeping the gold price up. The demand for the gold. Silver, the demand's just as strong. The central banks aren't buying 10 tons of silver like they're buying 10 tons of gold, unfortunately. But still, silver's gone. And the bullion banks won't let it go over 35. It's not China. Jesus. Alligators. This guy's out of his mind. And he's so sure of it. Well, check the bullion banks, how much their derivatives are, and how much hot water they're going to be in if it goes over 35. Do that, alligator. Some of the bullshit you're doing with China's keeping the price down. China's not keeping the price down. God. Yeah, like China can control the silver market. Right. Okay. Sure. So that's what's happening. But gold, they can't because gold is too much demand by central banks. Soon it'll be silver because as gold goes to 5,000, 10,000 an ounce, silver is still money. They'll want to get silver like they get gold. And you'll see the silver price finally get to 1,000 an ounce. And everybody's looking at it from the paper standpoint. They don't get that it's the $50 is a paper price. It's a controlled, it's a price fixed derivative price. It's not a free market price. Gold's hitting free market, kind of. It's not quite there yet. But silver is not a free market price. So when you get silver to a free market price, you're going to see 500, 1,000 an ounce because that's where it belongs. It's very limited and the demand's huge because everybody's getting out of the dollar because it's worthless, and you go into gold and silver. And that's really the bottom line. So I tell you to buy silver because that's where we're at now. You got to buy it because it's the continuation of gold, but right now all the central banks are buying the gold, and the silver just isn't being, well, I assume it is being bought, but what the difference is, the gold COMEX has to cover, right? When they want delivery of the gold on the derivatives, they have to cover, not on silver yet. So they don't cover it. They owe 30,000 tons, and they owe it, and it's like they just ignore it. So what are you going to do? All right, let's take a look at the stock market now. So now we got a few extra things to look at: the stocks, the Bitcoin, and let's see. The Dow is at 40,006, up 102. Americans are dangerously dependent on foreign-made generic drugs. Tariffs can fix that. How can fair tariffs fix that? The only reason Americans are dependent on foreign-made drugs are they're cheaper. So the tariffs will raise the price, which will raise the price of the generic drugs. So you'll buy American. How does that fix anything? It's just stupid. All right, let's see. Gold 32.22. It's a joke. It just sits at 32.22. And silver at 32.26. Let's see what Bitcoin's at now. And it's funny how Bitcoin is the only one that moves. Everything else is like $5. Bitcoin, 85,000. Who knows where it'll be this afternoon? Who knows where it'll be tomorrow? This is the problem with Bitcoin. Mario Lemieux, I can see it, I can hold it, I can feel it. It's real. Bitcoin, you don't even know what it is. You can't see it, you can't feel it. What do you have? You have no idea what this is, what this Bitcoin is. So I can't believe people would actually spend any kind of money on Bitcoin as if what? They know what you don't even know what it is. When you see the little gold Bitcoin, that's a gold coin. That's not Bitcoin. You have no idea what Bitcoin is. None. It's digits. It's a computer thing. It's not even real. It's not a computer. Why would anybody spend $5 on that? It just blows my mind how stupid people can become. All right, let's go to baseball. So let's see how we did yesterday. We had Pitt under 7.5 with Skeens on the mound, and they won 10-3. I keep doing that where I know Skeens is on the mound, so I'll take Pitt. Instead of taking Pitt, I'm taking the under. Oh, I think this was a huge, like a 250, so I had to go there. Philly under 9, they get 10-4, they lose. Tampa Bay, there's a winner. Tampa Bay, 16-1. I hit Tampa. The Yankees over 9, 4-1. They're not hitting. Carlos Carrasco with his 5.94 ERA in case he gets one run. Toronto under 9. They play an 8-4 game. I lose that. The Mets 5-1. I have the Mets. I win. Detroit, and we win 9-1. That was a 2-unit. It was Scooble. St. Louis 8-3 over Houston. I have Houston under. No. San Diego over. Yes, that wins. And the Dodgers over 8, and that ties. So I have a pretty shitty day. I lose Pitt under when I should have played Skeens. I hit Detroit, and I hit San Diego over 7.5. So of the 3 bets, I go 2-1. Okay. I keep getting it wrong, like with Skeens. Instead of just taking Skeens to win, I'm going under because I think he'll shut him out, but I don't think Pitt can hit. Or the pitcher on Washington, Lord had a 4.82 ERA, and I don't think Pitt can score that much. So I end up instead of taking the app. Now a lot of it is the money line. If it's 300, I'm not going to take it. All right. So it's today's 4:15. We start off. Oh, no day games. All right. Arizona, Miami. Both are Arizona 9-7, Miami's 8-7. Arizona minus 160-9. Merrill Kelly 2-1 with the 7.20 against Connor Gillespie. 0-1 with the 3.86. There's no way in hell I'm taking Arizona with a 7.20 ERA guy. Connor Gillespie. That's the other thing. You get these bullpen guys. This guy, I know he pitches 5 innings. He gave up 4 runs to Pitt, then 1, then 2. So he's getting better, this Gillespie guy. In Arizona, Kelly's 2-0 with a 7.20 ERA. He gave up 1 run. Now he gave up 9 runs to the Yankees and then 3. So again, it's skewed. I'm going to go under here. I can't bet Arizona with a 7.20 ERA, even though he had 2 good outings and 1 bad one. So Arizona, we're going to go under 9. All right. Washington, Pitt. So Pitt wins with Scanes, and now we got Jake Irvin against Mitch Keller. Pitt 145, 8.5. They're both 6-10, 6-11. Irvin 0-0 with the 5.63. Mitch Keller 1-1 with the 4.24, 8.5. So we're going to go over. Pitt over 8.5. That seems like a good play the way Pitt hit yesterday, and they're getting another crappy pitcher with the 5.63 ERA. So looks good. Let's see. So Pitt over 8.5. We got Seattle and Cincinnati. They're both 8-8. Seattle minus 110, 8.5. The game's in Cincy. Luis Castillo 1-1 with a 2.12 against Nick Lodotto, 2-1 with a .96. We're going under. This will be our first. This will be a 3-star. Let's go Cincy. Under 8.5. 3 units. 2 good pitchers. Low ERAs anyway. Seattle doesn't hit, so this makes sense. This is 8.5. All I can do is pick it now. I can't wait till the game's over and pick it. So we will see. 49ers and the Eagles. The game's in Philly. Philly is 160-8. Justin Verlander, who is stinking it up. 0-0 with a 6.92. What are you doing, Justin? The guy's born in 83. 98, 13, 20. The guy's 42 years old. Just had his birthday. 42 years old. Let's see. He gave up 2 runs to Cincy, 3 runs to Seattle, and 6 runs to Cincinnati. All right, so what do we do with this guy? Well, the problem, too, is against Seattle, he gave up 3 runs in 2 innings. So in his 5 innings, he gave up 2 runs to Cincy, and then he gave up 6 runs to Cincy. Yeah, see, that's the problem when they only pitch a few innings and they give up, 3 runs. Yeah, but in 2 innings, it gets converted to 9 innings. So he's really not pitching well. And Zerto 2-0 with a 1.50. Yeah, I got to take Philly here. I got to take Philly. I'll make it for 2 units. Philly's 160. I think they'll rough him up. He's not pitching well. I mean, he's given up a lot of runs. All right. Boston, Tampa. Now, you keep an eye on him. You know he can shut out everybody when he's on. Problem is he's just not on yet. Boston, Tampa. Walker Buehler from the Dodgers, 1-1 with the 5.74. Ryan Peapot, 1-1 with the 3.34. This is the game I lose because I go, I guess it's an over. And both pitchers can shut you out. Both pitchers can give up 10 runs. And you're just trying to pick which one it'll be. The game's in Tampa. I had Tampa yesterday and won. I'll take Tampa again today. No bet. Kansas City against the Yankees. Yankees won a low-scoring game. I don't know where the Yankees' bats are at. They're not hitting. Yankees 220 and 8.5. So that's what happened, I think, yesterday. The Yankees were like 250. So I had to go total. The Yankees won, but it was such a high number. Michael Wakaka, 0-2 with a 4.20 for KC. Max Fried. Oh, you saw Max Fried. I'm going the Yanks. It's 220, but I don't care. New York Yanks. And I'll make this 2 units. Cleveland and Baltimore. Baltimore 150-9. Logan Allen 0-1 with the 3.60. Baltimore, Charlie Morton 0-3 with the 8.78. Baltimore, Cleveland. Yeah, we're going to go over here. Cleveland over 9. I got an 8.78 with Morton. Baltimore can hit. Cleveland, everybody's like 8-7, 8-8, 7-9. Atlanta, Toronto. Atlanta's starting to play better. They're 5-11. I think they're getting some players back. Blue Jays 9-8. Atlanta -115. Spencer Swellenbach 1-0 with the 0.45 against Kevin Gausman 1-1 with the 2.33. We're going to go under here. Atlanta under 7.5. So superficially, we're looking at the starters' ERAs to come up with our picks. And I'm really lost at what you do. Prophet asked me about, well, do you look at, defense? And the only defense you really have is the pitcher, right? You got Spencer Swallenbach with the 0.45 ERA. He's the defense. So that's kind of what I'm doing is betting the defense here. He can hold the hitting. You're not going to hit what you have this guy. So that leaves it to the other way. So that's where you go with it. All right. The Mets in Minnesota. We got Tyler McGill, 2-1 with an 0.63 for the Mets. Bailey Obert, 0-1 with the 7.11 for Minnesota. The Mets are 115-8. And we're going to go with the Mets. METS, Mets. And we'll make this 2 units. Again, it's a 0.63 against the 7-11. It's a very simple pick. You assume he's going to shut out the Mets, so the Vikings. So it doesn't matter really their offense. They're not going to hit this guy. Detroit and Milwaukee. Detroit 10-6. Milwaukee 8-9, basically even. Detroit 115, 7.5. Joe Flaherty 1-0 with the 1.62. Quinn Priester 0-0 with the 1.80. Is he a bullpen guy? He's pitched one game April 10th, 5 innings, 1 run. So no, he's not. So I'm going to go under. Detroit under 7.5. I'm not going to go unit. It should be 2. Oh, we'll go 2 units. Detroit's a team I can never win with. If I play them, you think they're going to win, they lose. You think they're going to lose, they win. You think they're going to be low scoring, they're high scoring. You think they're going to be high scoring, they're low scoring. This is the problem when you have a minor league team. They're not consistent. And the Tigers are very inconsistent. Like I said, I don't like their manager because he's a cheat and a liar, and then he lies about it. He's trying to say, I didn't know what happened in Houston. I didn't know they were hitting the garbage can. Well, when you listen to him now, he seems like he's in charge, right? You never get the impression he doesn't know what's going on. So let's go to Houston. He doesn't know what's going on. Altuve and the boys are just doing this without knowing what they're doing. Come on. And then he lies about it and says, I'm really disgusted by this manager. All right. Oakland against the White Sox. Oakland -160-8. Jeffrey Springs, 2-1 with the 4.20 against Schonberg, 1-2 with the 6.08. Chicago's terrible pitching. Oakland, I don't know. 2-0 with the 4. I got to go over 8 here. So I'm going to go Sox over 8. Houston and St. Louis. I took Houston under, and they obviously scored a lot yesterday. Houston -137.5. Hunter Brown 1-1 with the 2.0 against Eric Fetty 1-1 with the 4.20. I'll go Houston here. Hunter Brown's pretty good. California and Texas. Texas minus 125, 8.5. UC Kakuki for California, 0-2 with the 5 against Tyler Mayo, 2-0 with the 1-3-2. We're going Texas. Go Texas, beat Oklahoma. The Cubbies against San Diego. We got the Cubbies minus 160 and 8. Cubbies just destroyed the Rams 16-0. Shota and Magana, 2-1 with the 2-7-0 against Randy Vasquez. 1. Oh, here we go. This is going to be our play of the game. Cubbies under 8. This will be 3 units. The game of the day for us. A 270 against a 172. Perfect. San Diego's 14-3. My God. Colorado against the Dodgers. The Dodgers are only 12-6, so I don't know. You think they're going to lose a game? They're highly overvalued here. Minus 325. This is why I took over 8.5 yesterday, because they were like a minus 300. So I couldn't play the Dodgers since their pitcher kind of shut down Colorado. Colorado, again, on the road sucks. They're such a skewed team because you can't look at their stats about anything unless you look at a home stat or in a road stat. Dodgers 325, 8.5. Ryan Feltner 0-0 with the 2.81 against Landon Knack 1-0 with the 10.38. How the hell can I play the Dodgers minus 325? So we got to go over 8.5, which we did yesterday, and it got us nowhere as they beat them like 4-1. But it's the same thing. How can I play a 325 with a pitcher with a 10.38 ERA? Are you kidding me? This Ryan Feltner is 0-0 with a 2.81. You almost could play him. All right, so this is baseball. Let's go through it. Arizona under 9. Pitt over 8.5. Cincinnati under 8.5. Philadelphia, Tampa Bay, the Yanks. Colorado over 9. Atlanta under 7.5. The JETS, Mets. Detroit under 7.5. The White Sox over 8. Houston, Texas, the Cubbies under 8. And LA over 8.5. The bets, Cincinnati under 8.5, 3 units. Philadelphia, 2 units. The Yanks, 2 units. The Mets, 2 units. Detroit under 7.5, 2 units. And the Cubbies under 8, 3 units. So there's 6 bets. Nothing big, 2 and 3 units. Don't get too carried away. We need about a month, so we're starting to see things, but again, it's the stats are so skewed that you really don't know what you got, right? And that's the big problem. All right. Any news in baseball? Boy, really nothing. Cubs pitcher Justin Steele undergoes season-ending surgery. This is the problem. They have them throw all these spins and all this hard stuff, and then their arm goes out. They got to stop doing that. So what's the point of this 5-inning, 100-pitch, every once a month pitch? It's all bullshit because the guys still get. Why is he getting hurt? They're not throwing anything. You might as well throw the guy 150 pitches because he ain't getting hurt because of how many pitches. So I guess the Athletics are playing in their minor league stadium. Yanks Marcus Stroman going on IL due to knee inflammation. Well, at least that's not the arm. Clayton Kershaw to begin rehab assignment next week. How is he injured? They just started. Let's see. Yeah, there's really nothing here. So let's go to the NFL. It's always something to talk about there. Patriots blew a shot at number one pick, so what will they do at number four? Probably screw up. Uh, I don't know. I hate these hypotheticals. Will Prime Jr. be drafted number two? Who the fuck cares? Wherever he ends up, let's wait till they're drafted, and then we'll see where they are. I hate these. Will he do this? Will they do that? Jalen Milrose and Jackson Dart among green room invitees. Why is Milrose getting any look at all? He's a terrible quarterback. Yeah, he's got good running, but I'm drafting a quarterback. Jackson Dart's the same thing. He's more of a runner than a thrower. Uh, if you pick Milrow, you're picking Anthony Richardson. It's not going to be pretty. And the fact that a guy has a strong arm doesn't mean anything. It's does he know how to throw it to the right team at the right time? Uh, at number three, the Giants plan a private workout with Prime Jr. Why? Go watch the game. Go watch this Kansas game and then come back to me. Caleb admits Bears were annoyed by Matt Eberflus. Who gives a shit? So not really. Okay, so let's go. Right. I hate this one. Hold this much silver and retire now. You ain't retiring now with silver. You've got to wait till at least July 1st. What a stupid thing. Let's see. Here's an EGON.
You have to have a company that has a proper audit by one of the big five or one of the major audit companies. And the same, that's the financial audit, the same with the compliance audit. The compliance side of the business has to buy a company which is reputable also, like one of the big five accountants. So that's the key. And then, of course, after that comes secure vaults. That is extremely important. And you've got to investigate if this company actually has the best vaults in the world and in the best jurisdictions. We consider that the best jurisdictions are Switzerland, we store in Zurich and in the Swiss Alps, and also Singapore is a very good jurisdiction. So those two are the best in the world, and that's really what people should look at. Don't store gold in your home country where you live because you want to be able to flee to your gold. So that's in summary how you should select your gold partner and store your gold. You have to have
When I flee, I'm fleeing. When I'm fleeing, I'm taking my gold and fleeing with me. let's see. All right, here's a Mark McGuire one.
Your home insurance company just made an extra $658 off you this year, and you didn't even notice.
And as we looked at last time, we've got 2 weeks ago, silver was being exposed, it was being capped. It was $2 lower at $32, where it was pretty obvious that capping at $32 into a strong demand undersupplied global market was going to become way too difficult, as insiders were being forced to short cover so as to accommodate New York dealers actually taking physical delivery to cover their COMEX short exposure. So alongside large backdoor loadouts, this was really forcing the price higher. And now the battle for $34 is there, but once rinsed, liquidity providers are seeing little resistance until the 38s. Now, and that's just short-term stuff. It's not realized that silver will be a major beneficiary of U.S. market Basel III compliance. So liquidity providers see that the cartel's critical upside breakout level is very low hanging above 34. They may be closer to 35, but it's low hanging and ready to be triggered. And spot silver is readying to breach massive short stops above that level. A pit close above 34 should trigger large short covering process to begin. Now we're looking for clues for the breakout into the massively expanded exchange for physical spreads. They're starting to contract. That's the clue. It's getting very risky shorting silver into a 4-year and growing supply deficits and very strong Chinese and Indian demand. And while these spreads are volatile, as the fight plays out, narrowing spreads are telegraphing an imminent upside breakout. And while these spreads have been as high as $1.38 per ounce, capping at this level expanded the EFP spreads to as high as 86 cents just this week to try and block 34 from getting filled. But each risky, asymmetrically imbalanced spread will continue to narrow into very strong Asian buying next week, making it very risky short silver. It's not all.
So what he's saying is, as they keep shorting silver to keep the price down, there's too much physical buying going on. So it's becoming very, very risky to keep playing this short game, is what he's saying. So we will see how much longer they do it, but it's going to end. So highly advised to buy as much silver now cheaply at 32, because once it hits $75, $100 an ounce, you're going to be kicking yourself going, shit, I wish I would have bought it at 32, which is fine. That's what makes sense. That's what people, they always do that. People are bitching at me about Bitcoin. I could have bought it. It's now at 100. Well, now it's at 85. Now are you still bitching at me? So that's what you're looking at. So he's saying the game's almost over for the derivatives, for the paper silver, as it is for the paper gold. And it's just there's too much buying because you've got to get out of the dollar. So the game is, I've got to get out of these. Wait till this starts happening. Right now, it's mostly they're getting out of dollars. Wait till they start getting out of euros for gold and silver and British pounds and Swiss francs. They're getting out of yuan into gold. Wait till they get out of the Japanese yen into gold, right? As they're getting out into gold, the gold price hasn't seen that. That's what we're waiting for, is that big move into it. But as people are getting out, see, you have to get out of this because it doesn't have a value. But most people don't understand that because they're lying to you. They're Madoffing you. Geez, Madoff passed the SEC audit, so therefore he must be legitimate. So I'm going to buy more Madoff because, oh, wait, you're saying the SEC was in on it. Oh, and they wouldn't say no. Oh, and I misread the SEC, thinking that they were really a good uh, a financial government agency, but they're really. Oh, you mean they're really full of shit? So this is what's happening now. The dollar's going out, so you've got to understand they're full of shit, and that's the problem. So the dollar's going out. You have to buy gold. There's no getting out of gold back into the dollar unless you need, you're going to the dentist or you got a couple $1,000 bill, you got an ounce of gold. Okay, I'll take the gold, I'll sell it, I'll get the money and pay off the bill. That's about the only reason. Otherwise, you're just not profit taking. You're not saying, oh, I bought 10 ounces at 2,000, now it's at 3,200. I made you know, 1,200 for 10 ounces. I made $12,000. I'm going to take the profit. Okay, how do you do that? You take the profit, and what do you do with the $12,000? What are you going to do? Oh shit, you're right. I got to get back into. I don't want this. That's why I got in the gold in the first. See, that's what holds the profit taking. You can't. You have to get back into this. So you only do it to pay a bill or a credit card or something that happens. Go on a trip, but the rest of it you're leaving alone because you have to leave alone. You can't put it back into dollars. You can't profit take it. And anybody who's not into physical gold is just going to watch it go to zero. Oh, I'm in an ETF. Sorry. Now, some of these gold stocks are doing well, but you're still in paper. You're still in stocks, and you won't get your money out of it. So just be careful of that. That's why I don't advise the stocks, because when the market crashes, all of it's going to crash. Oh, everything but the gold stocks. That's why I just get into physical gold. It just is so much easier. But I could see maybe Newmont I saw today is up to 50. Okay, maybe I get into that. Watch it go up to 80. Oh, okay. And then some of the other ones are up, but really hard to figure out what to do with it. But if I have physical gold, I don't have to figure anything out. I just watch the price go up. And if you really let it run, it'll go 5,000, 10,000, and you have it. Stocks you don't have, they can hold it from you. Oh, yeah, it's an E-Trade. Yeah, we can't give you the value, or we can give you part of it. We need it. Or in the banks, they don't have to give it to you. So you got to be careful with other people holding your money. You want to hold your money. So that's why you have the gold. Like I said, if I need to, I go to the store, I give him an ounce, he gives me $3,200 for it. Off we go. We're happy campers. So that's what you're at with it. So keep that in mind. But as much gold as you can get, but you're not selling it and profiting. You don't want to get back into dollars. Like I said, if you're paying a bill, you owe $2,000. Here's an ounce. It's $3,000. I'll keep the other grand and whatever. That's all you want to do with it. You don't want to take 20 ounces and sell it and then, okay, I got $60,000. Now what do I do with it? What do I do with it? I don't have bills to pay. I got it in the bank. I got the money in my safe. No, I wanted the gold's going up. The dollar's going down. I don't want to be back in dollars unless I have to be. So anyway, that's kind of the view of it. So don't profit take. There's no point in it. All right, back to
we get to witness a real-time
Mark
transition
McGuire
in the global financial architecture. But that's exactly what's happening in the gold and silver markets right now. We are standing at the front lines of a historic shift, a dismantling of a 50-year unbacked paper pricing mechanism, and quiet
price
birth of a
fixing.
decentralized physical bullion market that's rapidly gaining traction in the East and increasingly in the West too. And I'll tell you, what we're seeing today is unlike anything we've ever seen before. Let's start with the record-breaking flows into gold funds. In February alone,
U.S. gold funds saw nearly $5 billion in inflows, a new all-time high. And it looks like March might even surpass that. This is serious institutional capital moving into gold. And this isn't hot money. This is sticky money. Long-term allocation-based capital, not the kind that panics on a 1% pullback. It's buying for structural reasons, hedging against inflation, geopolitical dislocation, fiat currency decay, and above all, for wealth preservation.
I'm sorry, isn't inflation and the fiat currency decay the same thing? This is what really just frustrates me. These guys don't know what they're talking about. Inflation is the decay, is the value of the money going to zero. It's what inflation is. God, what a bunch of fucking idiots.
These are not traders. These are fiduciaries managing endowments, pensions, sovereign portfolios. They're allocating to gold as a Tier 1 reserve asset. Basel III reclassified physical gold, held unencumbered on balance sheet as a zero-risk Tier 1 asset in 2019. That right there was the signal. The regulators knew what was coming. Now here's the thing. This gold has to come from somewhere. Physical gold doesn't just appear when investors decide they want it. You're seeing massive competition.
Doesn't it grow
from
on
Asia,
trees?
India, China, Turkey, all buying hand over fist. In China, household demand is skyrocketing. In India, despite import duties, silver imports have surged. So when Wall Street flows billions into ETFs like GLD or into COMEX contracts marked for delivery, the vaults get stressed. Real metal is required to back those promises. You see, the price rally in gold isn't just technical. It's being driven by actual delivery demand. And this is where it gets interesting. When we launched our March 5th episode, silver was being held under $32, synthetically capped through shorting by the usual suspects, the cartel, the bullion banks, the insiders. It was so predictable, it was
JP
boring,
Morgan's all of
but that
those.
pressure couldn't hold. It was so predictable, it was boring, but that pressure couldn't hold. By the third week of March, silver had blown through $34, and now we're watching that $35 level with laser focus. And here's the truth. Behind the curtain, the shorts are starting to panic. Not because silver's moving up, that happens, but because dealers in New York are taking physical delivery to cover their own short exposure. Think about that for a second. The same guys who used to be the paper pushers, playing past the leverage with unallocated contracts, are now pulling metal. That tells you they're nervous, and they should be. We're now seeing a massive shift in futures market structure. Historically, the paper markets, COMEX, LBMA, have been flooded with leveraged speculators, funds placing short-term bets, contracts written against nothing but trust. But now, as institutions seek exposure to gold as a strategic, inflation-resistant asset, more of these futures positions are backed by actual physical gold or by delivery intent. That's changing the composition of the entire market. And that's the danger for the bears. Because here's what's different. These new longs don't sell into price rallies. They're not here for a trade. They don't blink when gold drops $40 intraday. In fact, they buy more. And the usual rinse and repeat strategies, short the futures, slam the options, rig a synthetic waterfall drop, they're failing. These positions are sticky. The risk of a short squeeze, especially with Basel III kicking in hard in July, is enormous. Now let's talk about silver. Silver is the sleeper asset here. Everyone's eyes are on gold hitting $3,000, and rightly so. But silver is coiled like a spring. Since late 2023, we've been tracking widening EFP spreads, that's exchange for physical, between COMEX and London. When those spreads blow out, it means one thing. Supply is drying up and someone's paying a premium to move metal. In early April, EFP spreads on silver hit 86 cents per ounce. An absurd number in a supposedly liquid market. That's your red flag. The cartel was desperate to cap silver under $34. They tried everything. Dumped contracts at the open, spoofed the bids, you name it. But the physical demand is relentless. China and India are still buying every dip. The smart money knows that silver is about to break through a structural resistance that's been artificially held in place for over a decade. So if you're sitting on the sidelines thinking this is some short-term hype, think again. What's unfolding here is the start of a global monetary transition. The shift away from Western paper futures toward Eastern physical price discovery is irreversible. The days of suppressing price with derivatives are numbered. And the time to position yourself before the mainstream catches on is now. Because when the COMEX short positions can't be covered, when delivery demands hit 20-30 million ounces in a single month, when the LBMA admits it can't settle in T+1 and pushes to 8-week delays, you won't want to be looking for product. You'll want to already have it. This isn't just a market trade, it's an escape hatch. And that's where the smart money is running.
Yeah, Shane, it was tariffs, Trump's tariff mandate that really caught the Fed flat-footed. And the sudden race to repatriate paper gold positions into safe haven first-tier gold exposed the inelasticity of the available physical bullion at current prices, meaning there just isn't enough bullion at current prices, meaning that it has to be bought back at higher and higher prices. Now, we previously posted the link and took apart the LBMA video. You remember this video that the LBMA came out and they were saying, oh yes, the idea 8 to 10 week refiner delays for COMEX compliant 100-ounce bars. They're just related to COMEX exchange and, really trying to spin it as, no, there are no real shortages. That backfired, and it drawing really unwanted attention into the real extent of the global supply shortages and prices. And despite allowable double accounting rules making the true extent of the supply problems hiding, it's been the failure to physically load out the 400-ounce standard bars from the Bank of England LBMA vaults into a Basel III NSFR T+1 delivery protocol. It's that it hasn't moved that's really exposed the true scale of these delivery defaults. Now, we've previously drawn attention to the largely ignored GC, it's called the GC4 Enhanced Delivery Contract. We spent some time looking at it, which enables a local London 400-ounce bar to remain in the London vaults without physically moving to the US vaults, and yet it's counted as there. Now, these flows also synthetically assist in closing the EFP spread, i.e. the spread between the paper price and the physical price. As an example, we witnessed this into an attempt to block central bank buy stops at spot 3,000 from getting tripped off last Friday the 14th. We knew that Asia would come in and take it, and sure enough, they did. Now, these failures to deliver have not gone unnoticed by competing central banks who have doubled down on targeting and locking in COMEX registered inventory for delivery, alongside locking in exchange for physicals at the AM and PM fixes for Basel III compliant market delivery. So in other words, central banks and sovereigns and the large buyers need a fix. So you might intraday it be higher and lower, but usually it requires an actual fix to move.
Village without cars?
And as we looked at last time, with gold outperforming every other asset class.
When the LBMA quietly extends its T+1 delivery terms to T+8 weeks, we're supposed to believe it's because the drivers are sick. Come on, anyone with a basic understanding of how delivery settlements work knows this isn't about transportation. It's about lack of available inventory. And here's where it gets really dangerous. Commercial banks like HSBC, JP Morgan, and Scotiabank, who've used unallocated LBMA gold to hedge their massive short exposures on COMEX for decades, can no longer do so with confidence. Those offsetting positions are breaking down. The rehypothecation system, where the same ounce of gold is claimed by 5 or 10 different parties, is starting to collapse. When you peel back the layers of this system, you realize how deeply vulnerable the entire structure is. This market is built on confidence and opacity, and once confidence goes, opacity becomes risk. That's exactly what we're seeing now. Sovereign wealth funds, state treasuries, and even US banks are starting to shift into fully paid up physical metal. And they're not just rolling over contracts, they're taking loadouts. That's metal out the back.
Okay, so basically we already got this. So you have huge demand, which normally makes price go through the moon, especially with low supply, which is what you have in gold and silver. Gold, you're still seeing a little bit of it not really hitting its true number, which is probably about 10,000. In silver, you're seeing it stuck at $32 when it's should even easily be $1,000 an ounce physical. So everybody that argues $50 is paper price. We don't care about paper price. We're looking at physical because everybody's dumping their dollars and their euros and everything else to get into physical. And that's why they're way, way undervalued. So remember that. I did bring out some new cards. Let's take a look at Comac. So we start off Mario Lemieux rookie. Looks like it's in really good shape and really centered. We have the Cal Ripken Dunrose 82 rookie, worth a small fortune. It looks like it's also very well centered. We have the cream of the crop. We have this Steve Yzerman. Now there's 100 count, there's 50 count, there's 25 count. This is the red label tops. It's actually the gold label set. Only I've got the cream de la cream. I got the one of one. There's only one of these cards. So how valuable is this? I have no idea because you have no market to compare it to. Now, I was thinking of giving Steve Yzerman a call and going down to Olympia and saying, Steve, I have this for you. How much will you give it to me? Because you don't have it because there's only one of these. So I was thinking of doing that. I would think he'd want the card, but you just never know. And then there's Hank Aaron. You saw my Willie Mays and my Mickey Mantle. I also have Hank Aaron. I also have Frank Robinson and a few others. This looks like very, very centered. Let's check the corners on this. Corners look really sharp. The centering looks really nice. This could be a 10 also. The maze, I'm not sure if it's a 10 because of little dings in the corners. So I could make it a 9, but it was really centered. Anyway, there's another one. That's when you had real good players. Mantle, Mays, Aaron, Pete Rose, Johnny Bench. You can go on and on. Brooks Robinson, Franks Robinson, all the way. Roger Maris was there. And that's really the key is you had those players. And now you have nothing like it. There's nothing out there. I'm looking at, the Tigers with their minor league batting. It's just pathetic. The pitchers are 10 ERAs. I bet you if you look at 1968, you would go through the stats. You wouldn't see any pitcher with a 10 ERA. I mean, what kind of joke is that? You wouldn't see anybody hitting under 200 in the lineup. The Tigers had like Ray Oyler, their shortstop, who was a great shortstop, couldn't hit. I think he hit like 190. Or Don Word, who was their third baseman, who was again an excellent fielder. So they could win one World Series at 68 with them. But you had very few players that could not hit 200. Most of the lineup was 300, 275 to 300. K-Line, Willie Horton, Freehand, Norm Cash, Mickey Stanley. I mean, you go through the lineup, they had to have at least 6 hitters hitting 275 and higher, with probably K-Line and K-Line hit 300. I'm not sure. Willie Horton was the big power hitter, probably hit 275, but he hit all the home runs. And that's what you miss right now is you don't have talent like that. You don't, even in the 80s and 90s, you never had this crap. I don't know if it's planned. Oh, they're trying to hit home runs, or it's just the hitters are so bad that's the excuse. Hard to say. But anyway, so a few new players. I had to go into the safe to get a credit card for income tax. That's the beauty of income of credit cards. I'll pay it off a couple hundred a month. So what else do we have? So we know China is fucked. The tariffs are forcing their cost up. The reason China was good is because you paid so little for their goods because their labor was cheap, and the government would keep the prices down. They'd bail everybody out. So now China's costs have gone up, and that's a big problem. The tariffs, as we said, are terrible. You will have free trade, not tariffs. Gold is the key. Gold and silver will go to the moon. They'll save you. 37 trillion in debt. You're fucked. There's nothing you can do to pay it off. You have to find a way to grow your economy and you have to find a different way than taxes to pay for the debt. This is the problem. So I think what they're trying to do is to do either Bitcoin, which is not government controlled, or maybe you do you try to do other things besides that. You try to do stocks, capital gains tax. They're trying to get capital gains tax on Bitcoin, but nobody's selling. Gold and silver, you don't get anything. So it becomes a problem. Paying off your debt is a problem. You got to get enough revenue in to pay your normal bills and then pay the outside, pay the extra. And that's a real difficult thing. What else? COMEX is basically gone. Just a little bit left, and then silver goes, and then it's all becomes physical. They got to take delivery July 1st. Should have that. BRICS definitely doing a gold-backed system. More countries joining. They haven't come out with gold-backed currency yet, but they're working on it. And I think this thing with China will definitely move it to a gold-backed system. The only thing that could help the U.S. is gold, because then they could raise the price of gold and actually pay their debt off with gold. Because it's the only thing that you've got to get something that goes up. They're trying to use Bitcoin, but Bitcoin is not real. Stocks are going down because earnings are going down because tariffs force costs to go up, but you can't just make the prices. I don't know where people get that. If my costs go up for this mug, Red Wing mug, so I want to sell it for $10, my costs are $2. So just because my costs go to $8 doesn't mean I can just add $6 and sell it for $21. I don't get where people come up with that formula. It's the market that, okay, so in a market, let's say this is 10 grand. That's what the market will pay for it. So I can't just say I'm going to sell it for 100 grand. And why would I sell it for 2 grand if I can get 10 grand for it? This is kind of bad because this isn't based on cost, like the coffee mug. But just because my costs went up does not mean I can increase prices. Why do people think that? Well, they'll just pass the cost on. You can't just pass the cost on. I'm going to pay $10 for this mug. That's it. $10. Well, my costs went up from 2 to 8. I'm going to raise my price to 15. I'm only going to give you 10. You got to lay off people and figure out a way to cut costs to still charge 10 because you can't charge 15. The market will not bear the $15. You can do all you want. It doesn't matter. The market's not going to just give you $15 for it because your costs went up. Who gives a shit? I warned the lady at Chinese. Her costs are going up. So she raised the general chow from 11 to 13, 13 to 15. And says, you better be careful. You just did a $4 price increase. So don't think you can go to 20 and anybody's going to buy it. So You got to be careful with that. Anyway, this is how I diversify my portfolio. Old baseball, a very limited hockey card, old baseball, and an old hockey. 82. This is, I think, 86. Yeah, 1985. This is 1985 tops. I know he's an Opachi too. Anyway, but this is what you do. That's diversifying your portfolio a little bit in the sports cards, 95% in the gold. See, I love the people are 10% in the gold or something, or 20% in the gold. And I'm like, you should be 90% in the gold. Why would you want to be in the other things? Well, I'll make money in stocks, and I'll make money in my real estate trust, and I'll make money in Bitcoin. It's all, you're still on the Titanic. You're still in dollars. Your stocks are in dollars, your bank's in dollars, your real estate's in dollars. And when the dollar collapses, everything collapses. So it's get out a dollar to go into non-dollar assets. This is kind of a non-dollar. The Rolex, now they're still valued in dollars, but they can be valued in gold, and of course, gold and silver. So it's a matter of getting out of dollar assets and getting into non-dollar assets. And that's what gold and silver is. So to me, to put 90% of my money in gold and silver is a no-brainer, because that's where the value is going to be. When the dollar goes out, I'm not going to get hurt with the gold and silver. And that's what people just don't see. You got to own stocks. You got to own bonds. If you're not in stocks, own bonds. Bonds are extremely risky. And that's what people are missing. You've got to get out of the paper. You got to get off the stocks and off that. And you got to get into real assets, which are cards, Rolexes, paintings, and into gold and silver, and out of that. So that's why most of my portfolio is gold and silver or the cards. It's the best thing to have. Rolex if I had it. And obviously Picasso if I had it, and or my Van Goghs, which are just posters. That's where you need to be, and I would have as much of it as you can. I don't want anything in the bank in any dollars. It just doesn't make sense. So that's how a portfolio should be. Right now, I would say 90% gold and silver, right? Like maybe 75% gold, maybe 10% silver. That's, about 85%. And then the rest, I wouldn't touch stocks or Bitcoin. Stocks will crash. They are. Let's see. Well, stocks we just looked at, they're like even right now. All right, so let's check our last check. Gold. Ooh, took a jump. 23, 32.29. We just got a nice little jump on it. All right, there. Maybe it's starting to break. We'll get to 33. Silver, 32.33. And again, silver goes up 15 cents and gold goes up $20 on a bad day. Bitcoin. Down to 84.7. It was 85, 84. $32.29, silver 32.30. It's funny how they're both 32s. And then we got Market Watch. So if we look at this, the dollar has been tumbling. It may have further to fall. Well, it's down 99%. I don't know how much further it can fall. Tesla Ford GM brace for tariff squeeze in no ordinary earnings season for beleaguered cars. They're all going to go broke because they won't be able to afford the steel, and they certainly won't be able to pass the cost on to the customer. Why would I buy those crappy cars? And the Dow is now down. It's 40,400, down 66. I really don't understand Netflix. Why is it have any value? All right. Bank of America profit jumps 10%, but CEO Monahan warns of a changing economy. I'd get out of Bank of America. I don't know how it's making it, but when they got to pay their derivatives off on their gold and silver derivatives and they got to come up with the actual gold and silver, they're going to be broke. But let's not talk about that, shall we? All right, that's about it. Anything else, my Teaserking family? So we will see. No trips planned yet, but I can see going somewhere this summer. Waiting for the unemployment, which was I didn't have revenue first quarter, which I proved I did. So hopefully within a week or so, I get that approved, and then that should be start. And it went up $100, and it went up to 26 weeks. Then I'll go on vacation and buy more silver. I don't want to start selling my gold to do normal things. I do have money in the safe, which I will use. And I think that's about it. Anything else? Anybody? McFly? All right. Baseball, once again. Picks. Cincinnati under 8.5, 3 units. Philadelphia, 2. The Yanks, 2. The Mets, 2. Detroit under 7.5, 2. And the Cubbies under 8, 3. Those are the 6 picks. And I think that's about it. So have a wonderful day. Buy your silver as much as you can at 32. It's a joke. You're looking at $1,000 silver, you can get at $32. Oh, what do you mean, Howard? It's 32. Well, that's not the real price. That's the paper derivative price. It's been pushed down and then it's going to break. Now we're waiting for the break, but you got to be patient on the break because they're still trying to control it because the banks will lose their ass once they have to cover their derivatives. And that's what that's the whole story, waiting for that to happen. It's going to happen by July 1st, so keep that in mind. Football draft is in a couple, I think next week, maybe the 22nd, 23rd. Baseball's just starting. We had the Masters. I think we got the PGA in May, and then the U.S. Open in June, and the British Open in July, or the Open as they call it. Well, if it's the Open, we don't know what it is. The British Open, we know. The Open, we have no idea. I think that's about it. So be careful. Tariffs are bad. Free trade's good. BRICS, gold-backed currency soon. COMEX blowing up very soon. China is bankrupt, and so is most of the other countries. So keep that in mind. All right, everybody. Well, have a good day. www.teaserking.com. Hope you paid off your taxes. I know it's bullshit. We shouldn't have to pay taxes. Half the stuff we pay taxes on are not income. You get unemployment or pension, those aren't income. Why do I pull money out of my 401k as a pension? Is it taxable? What the fuck's going on? Anything to get taxes so they can spend more. It's an absolute joke. All right, everybody. Have a good day. Enjoy. www.teaserking.com if you want to get my email. All right. I will talk to you tomorrow.